the doing of it is going to teach you more than the the constant ready, aim kind of a deal. And that made the world a difference for me, was to just go out and do it, and stop, look, listen, watch out, kind of get a feel very quickly for what the crowd was doing, because it never really cared about what other people thought. I just wanted to know what the majority of other people were doing, because I knew enough about supply and demand.
Welcome back, everybody, to Be the Trader. Today, I have a very, very special guest. It's someone that I discovered through Brian Lee Trades, who's been on the show before, but
Great
he
guy.
actually talks about he writes blogs, and he brought up Michael Martin. And if you're wondering who Michael Martin is, then you need to check out his show, because he has a podcast as well, which he's going to share with you today. He'll let you guys know where to find him and so forth. But his podcast is amazing. I actually been hooked on it now, because it really just shares the insights of how he thinks and how he believes other traders should be thinking alike as well. So without further ado, another great trader here with me, Michael Martin. Michael Martin, welcome to the show, man.
Hey, thank you so much for having me. Brian's a great guy. He reaches out quite a bit. And it's just, he adds to the positivity of the whole thing, because, man, it's hard making money even in good markets, So you have someone like that kind of chatting everyone up and being part of the solution. It's good to have someone like him in your corner.
Absolutely. And you're exactly like that as well. Like, Brian Lee's someone who's like tries to do whatever he can to help others. And I feel like that's what you're doing through your show.
Yeah.
And it's so hard to find people like that. So I'd love to know more about you, Michael. If you can just, start off by telling everyone, what got you into this realm of trading to begin with?
I'm sorry, that's all the time I have for today. So my first and foremostly about, Brian and the show and my show, your show, my ethos with the whole thing is to fill up my karma bank, right? That's really where it's coming from. Because when I started, there was an enormous amount of what I call intellectual greed. And it was hard to find out any information. I come from a working class background. I had one or two friends who were on Wall Street, and I didn't quite figure out what they were doing at the time. They were childhood friends of mine, so they were both monumental in helping me figure out what was my foray, what was my entry point. I grew up, my parents are Depression era kids. I grew up in Putnam County, New York. Started ice skating when I was 3, big into sports. I was also an artist. I started playing guitar when I was 7, back when people played instruments. Now everything's done on a friggin' Mac, which is such a snooze. I don't care about beats and rips and what? Like all that stuff. It's just so banal. But anyway, I do have a framed Asia poster. I saw all those people in the bands that they started with, which was amazing. And just like in trading, you learn to develop your ear, right? Because your ear is your biggest instrument when you're a guitar player. Then you learn, I started writing and coloring with pastels and acrylic paints. And so as I grew up, I had a very rich experience, both as a young boy growing up in the country where we had 4 distinct seasons. It was very safe. It was also very white. So culturally, I knew I was going to grow. But sports were a huge part of my life growing up. Ice skating at 3.5, baseball when I was 7 that spring, started golf that summer after, started guitar that fall. Another year or 2 later, started painting, and all of that stuff has largely still been in my life, up to today. And I wanted to be more of an artist, in New York City, it's the financial capital of the world. There's a lot of pro sports teams, but there's also lots of arts and culture. My parents were big for seeing like Broadway shows, musical theater, and they saw, John Raitt, Bonnie Raitt's dad, Old Man River, and Yul Brynner and all the legends. And that led me to go see, shows when I became, a young man in Broadway. And some of the talent, it was just remarkable. And so the cutting edge for me was trying to figure out, coming from a working class background, I had no problem with work ethic, but I needed, they say work hard, work smart. Well, I had to learn how to work smartly, because that was not part of my paradigm. It was, cut grass, trim hedges, caddy golf bags, wait tables. You work certainly very, very hard. You make a lot of money, but if you don't go to work, you don't get paid. So the opportunity cost of going to West End 2 in Jones Beach with my girlfriend, Patty, which, amazing woman at the time, was great. But the caddy master is waiting for me to show up because they get a lot of play. And in waiting tables, you get to meet people who make money. You get to meet a lot of the sports people as well who have a brand. I caddied one of the guys who helped me quite a bit. I don't think he would ever know this, but they were bankers. A lot of these folks who played golf. I caddied at Winged Foot and Quaker Ridge in Westchester County, and a lot of those guys were, Wall Streeters. And so I got to hear the culture, I got to hear the language, and that helped me make my foray, because I didn't have anyone else to have those conversations with. So I was fantastically scared because I didn't have any relationships. But on the other side of it, I knew I wanted to paint. I knew I wanted to play guitar. And I still paint and still play guitar. But I needed to find a funding source, because for the people that I knew who were in the arts, and I had family who acted, most of them would get jobs and they'd get paid. They did pretty well, but they were always waiting for the phone to ring. So there's still that kind of working class thing about being a performer. It's like you're waiting for your agent to call, you're waiting for a director or a producer, or, in the case of, playing guitar, I've always sought out the best people, to help me get not the information, because the information is just a data point. You don't know. I want wisdom, right? That's why I sought out all the teachers that I have. We can talk more about that, as the show goes on. But in a long-winded way, I wanted to find a way that I could fund my art and be true to my heart and soul, but at the same time make enough money to live and have a Ferrari and live in the Dakota in Central Park West. And so that's kind of how things evolved for me, is to kind of figure out and culture that pearl as time would go on. And then luckily, just through a lot of hard work, a lot of persistence, a lot of determination, a lot of really good attitude in the face of enormous amounts of failure, you just persist, no matter what happens. It's not, one day doesn't typically define you, unless, of course, you get super over levered and you get blasted for half your capital. But for the most part, it's just day after day after day, the monotony of it all and being able to deal with that.
So, it's interesting that, you start off and you still have that passion for the art side, there's so many questions I want to ask around that.
Yeah.
Like, music, art, and then the idea of, working hard versus working smart. But then on top of that, how you still pursued that. I feel like trading, and we'll go into this a little later, but remind me if you can, but about how trading is a little bit of an art and a science, if you will. And it's interesting that your background's in that and you have passion in that as well. So it's cool. I want to get on that a little later in this conversation, but I also want to find out, when did you actually start trading? And then tell me a little bit about, how long do you think did it take you to find some type of consistency of, if you will?
So we have to operationally define trading, right? Because at the time there's no internet, there's no anything. It's pre-87 crash. And so I knew I needed to take the step into a realm that I had no idea, right? I had no idea what the hell I was doing. And two, there weren't any, the dissemination of information was hard. And there were really, back in those days, Solomon Brothers, Goldman Sachs, and Morgan Stanley, which were 5 million or more in types of accounts. Now everything is retail because they want the low-hanging fruit, right? They need to gather assets. That's pretty much what those folks do. And then you had the wirehouses. You had Payne Weber, Merrill Lynch, Smith Barney Harris, Upham, which was less than 3,000 people. You had Shearson Lehman, which included E.F. Hutton, Loeb Rhodes, Hayden Stone. Bear Stearns, of course, which was also known as a very good proprietary trader. So you had to figure out, where would you go to put your money? Yeah. You also had Dean Witter. You had Reynolds Securities, which was a legendary place back in the day, which was where Jack Schwager started. Hayden Stone was where Michael and Ed were. Amos Hofstadter was in and around that circle of people too. So I just went in with the money that I had saved, because I had effectively had my own landscaping company. Okay. And I bought a big Bobcat walk behind. It was a 3-foot deck. It was a belt-driven system. And there was this one piece of property as you would drive up my hill that everyone could kind of see. So clever me, I went up to the owner and said, "Hey, I'm going to cut your property for nothing." They were like, "What? You're going to cut my property for nothing?" And I said, "Yeah." I said, and I told them straight out, I said, everyone's going to drive through this neighborhood. They're going to see your yard, and it's going to be dark green this way. It'll be light green coming back. It'll be dark green this way. So it looked like a golf course fairway, which I had been on my whole life at that point, because I started playing when I was young, and then I caddied. I looped. And sure enough, everyone had, penis envy about the damn, yard, and all the people were asking me. So it was a great way to kind of like, it was the free plus shipping kind of giveaway back in the day. So, I think I've lost sight of your question now because I tend
When
to
did you start
ramble.
trading actually?
Yeah. So with all that money that I raised, I was able to go up and start an investment account and do it. I didn't know my ass from a hole in the ground, but I still did it anyway because as I've always said, the doing of it is going to teach you more than the constant ready, aim kind of a deal. And that made the world a difference for me, was to just go out and do it and stop, look, listen, watch out, kind of get a feel very quickly for what the crowd was doing, because it never really cared about what other people thought. I just wanted to know what the majority of other people were doing because I knew enough about supply and demand. And I bought like McDonald's, GE. I didn't really waver too far from what was out there, in terms of sex appeal or whatever.
Yeah.
There was really only blue chips anyway, for the most part. And NASDAQ, which were considered fantastically risky things because they couldn't get listed in New York, which of course is epic baloney. But until you learn that a lot of what comes out of Wall Street, especially through mainstream media, is marketing and garbage and nonsense and not really provable.
Yeah.
You have to learn the hard way. So it's humiliating to even look back at that because you fall victim to it, but you don't know how else to prove it.
So how old were you then when you did that? You
I was
opened up
18.
your account.
I was
18? Okay.
I was about 18. Yeah. It
And
was
then
the
when did
summer
you
after
feel
high
like,
school.
and when did you feel like you could just differentiate your asshole from a hole in the ground? When could you differentiate that?
This morning.
Yeah.
I mean, I don't know. I don't know, because it's so hard to, to separate shit from shinola. I mean, you have to be brutally honest. So I literally, the way I do it is to immune myself and vaccinate myself from words. I get tired from listening to, even whether I'm listening to old school Emerson, Lake and Palmer, or even stuff that people that I know who taught me and gave me lessons. I can't hear too much before it just becomes overwhelming. So I've blocked out television. I've blocked out any kind of alert or research services. I read The Economist because I want to know what's going on in the world. But I was, as Steve Martin said it really the best on Wild and Crazy Guy. He said, I went to college, I studied philosophy. And the problem is, if you study all this philosophy, you learn so much from all these other people, you end up screwing up your own philosophy for the rest of your life. And I'm kind of paraphrasing the way he said it, but I needed to learn to think for myself and to block out all the other nonsense, because even if you have the TV on in the background and someone comes on, you realize that everyone is just doing their best, and a lot of success in life is random. Case in point, Jack Welch. He was on CNBC every other day as some kind of management guru. And part of management is picking a good successor. Well, how did Jeff Immelt work out? Not good, right? So nothing against Jack, rest his soul, but you just realize that it's what Bruce Springsteen said. There's 57 channels and there's nothing on. There's nothing on. So I encourage people to even stop looking at charts, look at data, study the data, and see if you can find out your own formula for Coke, your own equation for the seasoning on Kentucky Fried Chicken. Make that your own. It'll be uniquely your own. And then from there, all you have to do is follow it day after day after day. And if you want to, you can kind of amplify that with leverage. But I don't advocate people using leverage very, very early on in their career. In futures and commodities, you don't have a choice because it's all in a margin account. But leverage I think a lot of people are drawn to that because they want to seek the returns. Then you have to learn how to keep your losses small. I guess that was the big lesson in all of that, is that blue chip doesn't mean anything. You got to remember, IBM went through this 10-year period of time when they were going from mini computers and AS400s and we're going to the PC world. All the while, the clones, the Dells, the Compacts were kind of coming about. So there's 10 years where that stock was completely underwater. Then you find out the hard way. If you had put $10,000 in Microsoft or Apple Computer at the IPO, you'd be worth a couple $1 billion right now. Well, that's great. But after the first 10 years of Apple, you'd have $8,500. So with crypto going berserk, which is the darling of the day, can you imagine have $10,000 to your name and having it all in Apple, having it down whatever that is, what, 15%, while you're watching these crypto things go berserk. So all of that tongue in cheek stuff is bullshit, because you don't know one person that did it. But the broker dealers love to call, because they just want your money. They want you set it and forget it.
Yep.
Gather assets, wrap it up in a fee-based program, and then go out and gather new assets. No financial advisor is ever going to get called into the office because their accounts are, up 10% when the market's down 4, or if the market's down, if their accounts are down 10 and the market's up 10, it's not a concern. Alpha creation is not a concern on Wall Street. So you really find out that whether you have means or not, whether you have an account or not, you're really on your own. And the more you can realize that, despite Howard, stock twits, and all that stuff, I know Howard a long time, it's all great to have a community. But at the end of the day, it's you. And I had to stop when you asked the question about 45 minutes ago, when did I know my answer from the hole in the ground? It's when I stopped caring what other people thought, because even if they were very, very smart, I still had to manage my own risk. I had to be independent thinker. And if I ask you, Alex, what do you think about Cardano here? Is this the time to buy? Because if it goes to 5, I'm going to have regrets. If I buy it now and it goes back to $1.09 where it was the other day, I'm going to have regrets. So you need to figure out that 80% of this is emotional and psychological. And how can you do that without sabotaging yourself? Because if you're listening to the crowd, you can jump the gun and just keep changing things without any plan, because you don't have a plan.
I want to jump in deep now, because you're saying so much stuff that I want to get into. So if you can answer real quick, just this last thing, and people, if you want to know more about Michael, go listen to his show. We'll have a link in the description below, because you need to go check him out. But how long have you been consistent, in terms of profitable, just so people can have an idea? And then I want to start asking you some questions, because you've thrown out so much out there that I don't want to forget, and I want to go attack right now.
So I'm about 35 years of experience, and I'd say 30 of it, I can look back and say, I knew what I was doing.
Cool.
Sometimes I was still sophomoric, which for me is knowing the right thing to do, but still doing the wrong thing anyway. So there's so much of it is about maturity, how you mature as a human being. It's not about the magic chart pattern. It's not about the best brokerage account. So yeah, about 30 years.
So let's start off with what you said first. And that was the very beginning. You said I had a lot of mentors, a lot of teachers that helped me. I'll talk about that a little bit later. Could you explain what you mean by how that was able to help you in some way, and what you learned from them?
It's a great question, because anybody, even your Uber driver, can have wisdom, right? I mean, it doesn't matter really what they do during the day to kind of fill their hours. The guy that I was talking about at the top of the show was a guy named James Stern. He was a banker for Shearson Lehman that you can read about in Barbarians at the Gate. He was my regular 6:43 a.m. loop on Saturday and Sunday. And he was 1-2 to the green, 1 or 2 putt. And he was great, 1 or 2 handicap. Great guy, funny as all hell, and very generous with his time for me. Because I come from working class background, and I had come from waiting tables in the winter, right? Because you can't caddy.
Yeah.
Although the clients that I had, one of the guys that I caddied for, his family owned Doral Country Club at the time, and I could go there and play whenever I wanted, but it wasn't practical. So you pick up wisdom and you ask people their opinion, but then you still have to calibrate it for yourself, right? And kind of internalize it, and then go put risk on, because you can't paper trade your way to financial success. Then I make the mistake of trying to draw channels, which are useless. You don't draw lines on top of uptrends too. I don't know why people do that. They add all these indicators, which are emotional band-aids, because they really have insecurity, right? And most of the indicators use price as an input. So why can't I just look at the price? I don't need to use MACD or something like that, which again makes you feel good after the fact. So then as you grow, you take lessons. Sometimes you have teachers, like in guitar, you'd have weekly lessons, right? Here's a scale, here's a song, and you learn it. You go back and say, play it out loud. Okay, here's a nuance you need to fix. You go, here's a new song, but still work on this one. And you keep pushing the ball down the field. And then eventually you get good enough where you outgrow that teacher. You need to scale up. So it's just like school. You go high school, college, maybe you go get a terminal degree. And I think wherever you are in your life at that period of time, oftentimes if you're super ready and you're very, very clear, the teacher is oftentimes right there under your nose to help you out. Now, there's a million places I can go at that point, from art, from guitar, and from trading. So I'm going to turn the mic back to you so I don't ramble.
when it comes thanks, when it comes to the whole idea of you take what you can learn from someone and then figure out how it can work with you. Could you explain what you mean by that and relate it to trading?
Sure. If someone says you have to buy the dip, you have to investigate that. It's not my style, but I've done it, right? Because I had to know what it feels like. So much of trading is feeling. What does it feel like to manage risk for you? It's as unique to you as your fingerprint, right? So we could both make money, although we do things fantastically differently from one another. So you have to figure out, are you a dip buyer, which could mean reversion? It could also just mean on any 10% pullback, I'm going to buy a high quality Dow component. You could test it. There's a million simulators out there. Or you could do, longer term things. Or you could do like Julian Robertson and Mark Yusko and trade pairs, buy Square, sell PayPal short against it, right? So you're always betting on the strongest horse in the barn. And I'm not making a market call here. I'm just using two names that I know in a sector. You could use AMD and Intel. In the commodity space, it's a matter of course to spread, because floor traders would oftentimes buy the front month and sell it deferred until they could square away their positions, because market makers in bull markets are inherently short, right? Because everyone's buying. So they need to have inventory, but they also need to be hedged because they're typically working for the spread more than they were working for directional trades. So you take all that information and say, oh, let me try this. Let me try it. What can I afford to lose if I'm wrong? Because I need to be in the trade. I need to be immersed in the trade. And that means emotional and psychological.
And if you mentioned emotional just now, and also a little earlier, you were talking about how people use indicators, people use lines, they draw their own lines. It's all emotional handicaps or emotional, like what's it called, crutches, if you will. And so I actually draw support resistance and use trend lines. So I'm very curious on your thought process of if you can go more into that, where you're just saying it's just price. So do you not even see how do you see the market then? Like when you're placing your own kind of like ideas?
Oh, all right. So I have to be quick with this, because at first, back in the day, we would use Lotus 123 as the spreadsheet, right? So you'd get the data and you'd look for seasonality in the commodity markets. As far as drawing charts, most charts are defaulted for 6 months. So you want to see the big picture. Where are you in the overall theme? How has the instrument acted recently? How does it respond to good and bad news? If really, really good news hits the tape and it doesn't move, there's probably everyone who's in is already in. So you might want to think about lightning. And you could do this because most of my buddies were on the floor. So you learn those floor trading tactics and bring it into your life, right? If really, really bad news hits the tape, but the stock still moves. And we're seeing that, right? Didn't Apple and Amazon, they reported numbers in recent quarters that were really, really good and the stock sold off. So a lot of this is like playing poker more than it is learning to draw a good trend line. Victor Sperandio would teach you that you want to go from the lowest low through the low before the highest high, and that's your uptrend line. The same thing for the downtrend line. Downtrends, you don't draw lines below the market, you draw them on top of the market, right? Then you're like, okay, if I want to be a short seller, which I'm not really a short seller, the dynamic for short selling is very different from buying long. And so a lot of this just kind of it's just like growing up. There's things that you're going to experience in high school that you haven't experienced. Other people will likely experience them too. But once you graduate, you can't go back there. There's analogies for college and you kind of grow. Then you get into, real life where you're out of school and you take those lessons with you and you try to build upon them. Take what you want, leave the rest, create your alpha. I know there's a million open-ended ways to answer that question too. I try to keep it simple. If it's not in the price, like my good friend Brian Shannon says, only the price pays. We have various ways of kind of saying that to one another. But, without getting into efficient market hypothesis, it's not necessarily the fundamentals. It's also what the crowd thinks. And the crowd is going to dominate. They're the ones with the money. So if they want the thing to go up, they're going to bid it up. If they want to, don't want to own it, they're going to offer a lot of stock and get the hell out. So anticipating what the crowd's going to do is an integral part of what I do, more than say trend following or trying to swing trade or what have you. It's more like, what do people want to have happen? Because that's what's going to happen.
Okay. And your book, I actually am only in chapter 5 right now. And I love the book, by the way.
Thank you.
It really focuses, so far, it's been focusing on the individual and inside and how we view certain things. Could
Yeah.
you give people a taste of what you, what people can learn from that book in terms of understanding their emotions? Because like you were saying in the beginning, like I trade different from you, or so many people can trade differently, but it's how they kind of manage themselves. Could you
Yeah.
explain that?
Yeah, I mean, we're on emotional budgets every day. You know what I mean? Like, you ever get into a fight with someone that you really love and you've got next day, you just feel beat up. You're in this emotional hangover.
Yeah.
Like, the market does that to people all the time. The question is, do they ever stop it? And if they don't, somehow they win in that situation by being a victim, right? So I didn't want to be in that spot. What you learn over time is that it's not so much what you know, it's what you know how to do. Traders get paid to execute. And that doesn't mean buy and sell. It means to create alpha. So knowing stuff and reading books and all this other kind of crap, it's interesting, but even in the space, it's our version of infotainment.
Hmm.
And so it's peeling away. It's peeling away. We kind of talked a couple of days ago. We said, David was already in the marble. All we had to do is set him free. You know what I'm saying? Like,
Right.
So everyone has that within themselves. The question is, how much are they willing to surrender? Smart people don't like being wrong. I had 4 Nobel Prize winning economists. You go to Wall Street and you find out that you're wrong at least 50% of the time. It's hard when their whole self-esteem is tied up in being the smartest person at the kitchen table. That's their identity. It's who they are. They go to Wall Street and Wall Street invalidates that. How does that feel? What does it make you want to do? Revenge trade? Call your girlfriend and bitch? Oh, that's sexy. That's going to get you laid. You know what I'm saying?
Yeah. Yeah. How would someone deal with that? Because that's a big challenge. I mean, that's probably like what everyone deals with. That's universal, right? Everyone deals with this at some level. And I think what you were saying too is the ones who are, the self-sufficient traders who are successful are able to get above that and be able to, is the right word, control their emotions, or really acknowledge their emotions and not let them take over. Like, how would you suggest people to get there, like to cross, to go to alpha?
So it starts with having goals, right? And again, forget trading. In life, I believe you need to have a goal. You have to have growth. Goals are growth. It means behavior. Behavior predicts where you end up in life. What do you want your trading to do for you? Not you, Alex, but what does a listener or a viewer want their trade? How do they want trading to serve them? What needs does it fulfill? If you have a need to be right, then it's a tough business, right? Meaning correctness, accuracy, right? They need to start thinking in terms of expected values, where you can be wrong 70% of the time, but for the 30% of the time that you're right, your winners are 10 times the size of your losers. So just even cash on cash, you can make bank. If you learn how to lever that, it could be even more. So let go of the need to be right, because it's not necessarily a game of accuracy. It's a game of expectation, mathematical expectation. Now, again, you could take the math argument all the way down to Ito's lemma and differential equations and all that, but that's a little over the top for everyday people,
Mm-hmm.
Question is, what's your identity? Where's your self-esteem? What is it that you do that's trading for, and what do you want it to do? Is it for the money, or is it for stature? If you look in social media, it's like a peacock farm. Everyone's peacocking. Look how great I am. Look at my followers. And I'm like, dude, just dribble. Just dribble. No one cares. Likes, retweets. I couldn't give a shit. Doesn't matter to me. It's all vanity metrics anyway. It doesn't move the needle. And I don't need the type of support. I got 4,200 followers. I'm happy with 1,000. If they connect with me, I'm looking for connection. I'm not looking for retail numbers. You see what I'm saying?
Yeah.
So it's a much deeper existence to me. And so in conclusion, I would just say, focus on getting to know yourself. What do you really want out of a winning trade? How do you get there? I don't know. If you have a big win, what's the first thing that you do? Do you publish it on social media? Do you call your parents? Do you, what do you do? What does that feel like? So follow your feelings, because your feelings, you have 2 systems at any given time. All of us do, myself included. We have our mathematical system for running the risk, but then we have an emotional system. And so the more we can get in touch with our emotional systems, the better I think we'll be. Because so much of what happens can come from your subconscious. That's why I'm saying everyone wants to talk about mindset and awareness, but they don't know the first thing about getting to it. What's your entry point? Well, what feelings are you feeling right now? Indecision, market's choppy, tape is kind of heavy, false breakouts. What does that make you feel like? Well, it makes me feel, like the Marcus is bearish. No, that's not the answer. That's a technical. How do you feel? What emotion do you feel? Fear, greed?
How is that valuable when you ask that question?
Yeah, that's a great question too, is because then you get to calibrate your behavior. What do you do when you typically act out of fear? And then you say, okay, well, that doesn't serve me. What are the results when I act out of fear, when I feel like I'm missing out? What does FOMO do to me? I tend to overreact. I get in, I don't pay attention to the tape, and I get in too early, and I face nothing but drawdowns. So then I can go back and reconcile that. Right. And you can say, well, that doesn't serve me.
Yep.
All I do is get agitated. I get angry. I feel like a victim. I don't want to, when I feel like a victim, I feel emasculated, and I don't want to feel those feelings anymore. So I got to stop that behavior, or I can continue to beat my head against the wall and try to bull my way through it. That typically doesn't lead to success, in my humble opinion, but do what you want, because what you learn in doing will be your best teacher, not me or you.
Is that relatable to what you said earlier on the idea, like you got to a point when you said, I've been training for about 30 years, or 5 years of that was the 35, but 5 years of that was, it took some time and then you got more consistent. But then you said something about how you would know what to do, but not always do it. Is that kind of similar to what you're talking about now, like acknowledging how you're feeling and reconcile that? Is that how you get over that hump, where you kind of know what you need to do and do it, besides like knowing what you need to do and not doing it?
Yeah, I mean, that's a sophisticated question that takes more than the time we have to answer, but you're 100% right. I think it's a gradual process. It's not black and white. It's not risk on, risk off. It's like when you're coming of yourself and you're maturing, you've got those Peter Brady years where your voice is cracking and, you've got the greasies. So you just have to keep working through it. It won't happen overnight, but if you're mindful of it, you'll start doing less of what doesn't work for you or serve you in your trading. But you have to have a goal. You can't be just like, well, I'm going to fund an account, I'm going to wing it. Then you're going to get wing it kind of results. You have to have a clear vision about what it is that you want to do. Where do you want to be in 5 years financially? And what does that feel like today? So then match your behavior with that feeling, right? It's part of your physiology, mine too. And so I needed to kind of keep conjugating. I needed to keep conjugating that day after day. Keep in mind, like for mean reversion traders, well, the mean changes every day. And the markets are constantly morphing to kill you basically and take your money. So it's a moving target. But most people, their tastes and preferences don't really turn on a dime, right? So you can get super close more to yourself than you can with the market. Right. And that's before we start looking at melt ups and black swans and meltdowns, right? Because black swans aren't always bad.
Well, how could someone, like, when they think of the idea of booking, having a goal, right? Because you keep going towards that, like have a goal, but sometimes wouldn't a goal of like, having a bigger account, whatever it may be, make you more emotional, where you start making emotional decisions?
It could be if you're looking at things in dollars and cents. If you risk 1/4 of 1% of your account balance, whether you've got $10 or 10 million, it's 1/4 of 1%. So you thinking in terms of percentages will help. And that was a big thing that switched for me, because coming from a working class background, I knew what I had to do to earn $500. So as soon as I lost 500 in the market, I'm like, oh my God. Now I'm like, oh, I've just lost my 40th pair of Golden Goose sneakers. No, just kidding. I mean, it's when you stop thinking in terms of dollars and cents and what that money could have bought you. You also borrow from Robert Kiyosaki or maybe Stephen Covey, and you say, as soon as you put $1 in the asset column, it stays there. It doesn't come out. Another tricky thing was like when you're trying to trade, you don't have enough money to live off of. The sustenance from your trading isn't probably enough to pay your bills, especially living in Manhattan where I was. So you have to find a way to fund yourself, but also trade and look at the money differently. Otherwise, you find yourself trading with scared money, as they say, and that never ends well.
That makes sense. That makes a lot of sense. And I know, we're already kind of going over on time here, but there's so much I want to dive into. Before we start to wrap this up, I do want to ask you something, and then I'll give you some time to like share with everyone how they can find you if they want to learn more, especially if they want to download your book, because I know that they're going to want to do that. And so that question is, if you had 5 minutes, right? Well, no, that's too much time. If you had 1 minute with, maybe it's a grandkid, maybe it's a son, maybe it's a daughter, just someone real close to you that you want with all your heart to succeed, and you're on your deathbed, right? You're like, you're out of here. You're about to get out. So you only have 1 minute to say something, to
Yeah.
give them some kind of advice so they can pursue one of the hardest things that they're ever going to probably do, trading, what would you tell them?
I would say take enormous risks. I would say when you're younger, most of your income earning years are before you. So you can afford to take bigger chances with your career and otherwise when you're younger. Two, don't worry about what it looks like. Dance like nobody's looking. Go run into traffic and then dance like hold up traffic, do your own thing. Don't worry about what it looks like. And for God's sake, don't ever care what people think about you. It's your life. It's your canvas. You get to paint it every day.
I like it. I like it. And obviously, like he's saying, when he says take enormous risks, we're not telling you to do that. But just FYI, like you guys need to, listen what he would be telling someone who's very young, who's trying to pursue something, one of their dreams. So I appreciate you saying that, man.
I mean, be bold. Be bold with what you want to do with your life. I'm not saying go take borrowed money and buy Cardano. Yeah. I'm not saying that at all. I'm saying in your life, whatever you want to do. Go do it and then seek out the best teachers, not necessarily for the information, but for the wisdom. What was it like? What feelings did they have to feel when they lived through different corrections? That's why all of my coaches and mentors have lots of gray hairs. They've played. My guitar teacher was on 4 records for Miles Davis. Obviously, I know Michael Marquez at Dakota, Helmut Weimar. I call all these people, Victor Sperandio. They're all good friends of mine now, but it's not to talk about the markets. It's more about life. You know what I mean? So, yeah. It's more about life. What choices did you have to make given what was available for you then? How did that work out? You know what I mean? What feelings did you feel with action point? Because that's something I can identify with is the feeling. The markets in the 70s, if you talk to the commodity corporation guys, first of all, they weren't diversified. They took all their money and they piled into one thing. It was like, of course, how do you think they made 2,500% a year? It's not from diversification. They piled in. They levered, they asked for more allocation. And also the markets weren't terribly crowded. It was like there were 5 or 6 people, Continental Grain, Commodity Corporation, Campbell and Company, John Henry, and maybe a handful of other people. But it's okay. So there's 12 big speculators. And the world's a very different place now. You know what I mean?
Yeah.
So, but I want the wisdom. I don't want you to tell me about the different grades of soybeans that you can deliver against a board of trade contract. That's not, I could look that up on the internet for free. I want to know, what was your behavior? What did you learn from it? Even if you felt you made a mistake, because that's what I can identify with. All you can do is your best on any given day. But the one thing that they all had was they had an absolute clear vision of where they wanted to be.
Okay. I love that you said that, because that really shows that you're focused on behavior. And as you mentioned before, like there's so many different ways, like, you may trade different, he may trade different, but the behavior is similar in terms of what has made them successful, their behavior and how they handle certain things.
Thoughts, feelings, actions, right? Actions and behavior. Behavior predicts where you end up in life. If you do the things that the pros do, you're going to get pro results. Then the question is, do you want to lever your trades or not? Because sword cuts both ways. And I'm not advocating that you do. You just have to be aware of it, right? So I want to know about the behavior, because they got the results, which are a matter of course. So I think having a goal and then matching that goal with your behavior, all you have to do is worry about yourself. You don't have to worry about what everyone else is doing. I'm powerless over where the market's going to go. All I can do is control my own behavior. So I can follow Bill O'Neill's advice and risk 8% on a trade, or I can lever my capital 4-1 and risk 2%, not of my capital, but a 2% move in the instrument, you see, because everything gets amplified. In commodities, you put down 5%. So a 5% move either way is either you're going to lose your margin for that particular trade, or it's going to double. It's kind of like real estate in that regard. So how do you feel about being right or being wrong? How do you feel about making or losing money? That has an enormous impact on your trading style.
If you could make real quick, I know I already said to wrap this up. This is the last question, because I'm just very curious.
I don't trust you. You've said that 17 times already. What kind of show you're running here?
Yeah.
Don't look back. You're not going that way, buddy.
Right. We're going forward. And I want to know this. If you can't, we're going to save this for another time. But I want to know, could you list and just bullet, not go into detail, just list like a bullet format list of what are the behaviors that those gentlemen and women that you've met that they have that replicate success?
Yeah. So they don't take losses personally. All they know is that, you're going to take a shot, you're going to be right or wrong, which means, like, how do you know you're right? Well, it ticks a penny. I mean, back when I started, stocks traded in eighths. So it's like, it's an eighth in your favor, it's an eighth against you. How do you know you're right or wrong? It's pretty black and white, but it's not personal, because at any given time you have good research, bad research, or methodology. You have good luck, bad luck, good timing, bad timing. So much of that stuff is out of your control. You could have great research, but bad timing, right?
Yep. Would that be the only bullet you would say?
I mean, so much of it, 80% of it is knowing yourself. So all the other stuff is not material, right? Spend the majority of the time knowing what you're doing it for. How does it serve you? Meaning, what do you want the money to do for you? But also, and I've spoken to, friends of mine who are in the day trading space. What is it that you want your day to look like? If you could time block your day, what do you want to do first thing in the morning? I'm currently in Los Angeles. Coco opens at 5 a.m. I don't know about you. I'm not sharp at 5 a.m., whatever coast I'm on. So I don't want to have to be up at 3 to learn the nuances of that market and reinvent myself every day. So if you're day trading, how can you automate as much as possible so that you can have Pareto efficiency? If you have X amount of time and money to put into your trading day, how can you get better rates of return if you're willing to put that work in? Or if you're comfortable with the rates of return that you're getting, right? Because it's meaningful for you, it's within model. How can you pull back and use less inputs, make the process more efficient, right?
I love that. I think we dived into that one-on-one a while ago, the Pareto principle and your time efficiency. I love that. So look, where can people find you? Because I know people are going to have questions. They're going to want to learn more about you. Could you let them know where they can find you, in your website, any handles?
Yeah. First things first is, like, I'm not a day trader. And so I don't have that sensibility. You probably won't find any value. I know that's not the big come on when you're asking someone out on a date. But I'm all into learning more about myself every day, because life goes on and we evolve as human beings. So I do a daily podcast, 5 or 10 minutes. There's no throat clearing. I'm not going to tell you about how I played golf on the weekend or had a good chat with somebody, because it's blathering and I don't want to waste anybody's time. I'm on a whole bunch of platforms, Stitcher, Google Podcast, Apple Podcasts. I think I'm on Spotify. But you can see all that at Martin Chronicle. It's Martin, like my last name. Chronicle is spelled Kronicle. And if you look at the top right corner, you'll get a chance to download the audiobook version of my book, The Inner Voice of Trading, which came out in September of 2011. And I'm probably going to re-record it, because I want to add some material to it. And, I had a different microphone at the time, so the sound quality was not that great, but it's for free. And I think if you listen hard, you can still get a lot out of it. It's basically, what are the things that I had to go through as I was cutting my teeth and thickening my skin? What did I think I knew how to do versus what the results were, as I was kind of trying to create my own sense of, who I was as a human being, and how would I manage risk across various markets. It's like a personal journey thing. It's not a how-to book. There's no trading rules that are going to help you. But this is more about your inner journey. And I think if it's said that trading is 75, 80% emotional and psychological, even if you run a trading system, that's where a person should put the work, because that's where the meat is on the bone.
Well, look, man, Michael, thank you so much for being here today, my man. It was a pleasure. And I know a lot of people are going to get a lot of value of this, and they're probably sharing with other people right now. So thanks again, my man.
Hey, you're welcome. Thank you for having me. I always find it a wonderful thing that anyone would care at all what I have to say about anything. So thank you. Congratulations on a good show. And I look forward to talking with you again.